Hi, this is Seth David for the Sleater Group, bringing to you another special screencast. This time we're talking about ratio analysis, another way CPAs can keep their clients. Hi, Seth David here for the Sleater Group, bringing to you another wonderful screencast. Continuing my talk about how CPAs can keep their clients, for that matter, why they lose their clients from where I sit. In my last post called Why CPAs Lose Their Clients from Where I Sit, I explained that in my experience, based on people coming in my door and giving me the feedback, it's usually because they don't feel they're getting the guidance that they're hoping to get. They're just getting a voucher and a bill, saying here's what you owe and please pay our bill so you can file your tax return. You just had a good look under the hood of their business. You prepared the tax return, you put it together. You're in a very good position to know how they're doing financially. Give them a checkup. Go a little bit beyond the tax return. You don't have to spend more than maybe 20 minutes on any one of these analyses I'm going to do. Today's is going to take you less than 3, and I'll show you what I mean. Run a balance sheet for the client whose tax return you just did, such as the one you're seeing here. And let's take a new clean sheet, and I just want to do a quick analysis. I'm using my Alt-Tab keys to flip back and forth between QuickBooks and Excel. I want to first look at liquidity. How is my client's liquidity looking? So let's start with their total checking and savings, 105,462.75. Okay, we'll call this cash. And accounts receivable, 35,810.02. AR, 35,810.02. Let's get some formatting in here so we can read the numbers a little more easily. And let's just call this total liquid assets. Sum it up. Alt equals is a quick way to get a sum in Excel. Alt and the equals sign. Now let's look at current liabilities. So let's take other current assets. Other current liabilities. First with accounts payable. So AP is 25,7869. What else? We have credit cards, 1473.99. What else we got? Other current liabilities, 6086.97. OCL. What was that? 6086.97. Total current liabilities. Sum that up. Alt equals again. Quick ratio equals total assets, total liquid assets divided by total current liabilities equals, let's try that again, divided by that. Based on this, my client can pay off their liabilities with their liquid assets almost 14 times over. That's pretty good liquidity. Of course, in order for information like this to really be relevant, you have to do it on a comparative basis. So I've gone ahead and created this spreadsheet here, which will let you you can put in whatever dates you want here to do it quarterly or annually, look at year over year or quarter over quarter. The point is to be able to look at this information, and I've spent 3 minutes or less really on the actual, production of this layout. So spend 5 or 10 minutes, go a little bit further, and lay it out quarterly. Take this balance sheet in QuickBooks and total it by quarter. Right? And this is set for all years, so you can just say, last year. Right? Last fiscal year. So you'll get your 4 quarters. Then you can take this information, and if you've got a spreadsheet like the one I've created here, you can lay the information out here. You can put in, do some quick calculations on your average accounts receivable, average inventory if it applies, and then have their ratios calculated down here. And spend a few minutes going over this with them. They're not going to understand what this means if you send it to them in most cases. But what you can do is you can analyze it. And I've even gone to the trouble of putting together definitions of these ratios in this spreadsheet, which will allow you to better explain it to your client so that you can do a comparison like this for them and say, here's what your company looks like, and is it improving? Is my liquidity improving, or is it getting worse? And if there's indications that it's getting worse, what can be done about it? Where is it getting worse? Are we not collecting our receivables fast enough? Those sorts of things. You could take a look at for them, spending minimal time and effort, and yet providing a tremendous value to your client that goes way beyond just a tax return. And this is what your clients are looking for. I've seen it. They've told me firsthand. Your clients called me and said that they want you to do this for them. I'm kidding, sort of course. But the point is that you can do something like this very easily. Now, if you don't have the Excel skills to put something like this together, I'm going to be working with Doug. We're putting together a web kit for the upcoming Sleater Accounting Solutions Conference, which is coming up this November 2013. If you're seeing this and it's already way past that, go to the next conference, because we're going to keep doing this year over year over year. So this is just one example of something we're going to try and put together for you in a web kit that will be provided to you as part of the Sleater Conference. If you're interested in something like this, send an email to me at seth.david@sleater.com, and I'll work with Doug and see what we can do to provide you with a template like this before the conference if you're interested. But certainly at the conference, we're going to be looking at putting together a whole kit of tools like this that you can use for yourself and for your clients. So as always, if you have any questions, email me, seth.david@sleater.com. I hope you're having an absolutely fantastic day, and I look forward to seeing you on the web.